I made a 10x return on this Ethereum trade in just 4 days. And today I'm breaking it all down for you, step by step, no shortcuts, no secrets, just the full strategy that led to this fast return in the markets. Stick around, because what you're about to learn could have a huge impact on your outlook as a trader. Before we dive into the details, don't forget to like, subscribe, and hit the notification bell to stay updated on all the latest videos, so you can get one step closer to mastering the markets like a pro. The premise of this trade was a shift in momentum. Looking at the hourly, we'd been steadily climbing up in the markets for quite some time, but this period of price action shows a clear shift in momentum. We were in an ascent in price, and now we are in a descent in price. The move that marked the top was here, and we can see by looking at our trusty tool, the delta, that it was as a result of this candle of positive delta. If you don't know what delta is, no worries. I have a full video explaining it, and we'll link it at the end so you can brush up on it. For now, just remember we want positive delta in blue to mark tops and negative delta in red or orange to mark bottoms. So we get our positive delta bar and at the same time put in a bearish divergence structure across both the RSI and the AO, with price making higher highs and the oscillators making lower highs. Some of you will notice that the RSI divergence isn't exactly textbook, as it's not fully formed above the 70 level, and you'd be right, but coupled with the delta, it was enough to put a shift in the trend and send us lower. Those familiar with this channel will know that we are always trying to look for pro-trend plays where possible. So in this area, it's a case of acknowledging the shift in dynamics of price and starting to be much more open to short positions. To look for shorts, we need to start marking some areas of interest that we could use as our basis for entry. We typically like supply and demand zones, or sweeps, for this purpose, otherwise known as swing failure patterns. If these terms are unfamiliar to you, no worries, but go ahead and save the above videos to watch in the future. We don't have much in the way of supply and demand, but we do have a high we can mark out. So we mark it up to see if it gets swept, whilst we get some nice other pieces of technical analysis and order flow that line up to take a short position. This is the only clean high in the area, so to speak, as these highs are all a bit too close to each other. And when marking out key highs or lows for sweeps, we really want to see them as isolated as possible. Price seems to bottom out here, and the AO gives us the strongest clue of this happening, with a bullish divergence at the lows. This is also present on the RSI, but not quite as clean, as we come a bit too close to the 50 level, and the second leg again isn't overextended. Regardless, we start pushing up. The AO is great for showing us when these pivots in momentum will take place, and where it's not as great at giving precise entries, we need to listen to what it's telling us and start paying attention to the high we marked out. When levels are swept, we want to see either a divergence occurring as it does so, or to move very fast into the level as well as high delta. We know what we want to see. Now we just have to be patient and wait to see if we get the right signs. And most importantly, be honest with ourselves and not try to force the trade if the stars don't align. Price ranges for 5 days until it pops up to the level. In doing so, it starts diverging on the hourly here and technically takes out the level, but you'd have to use a microscope to see it. And when any trade trigger is this unobvious, it's not worth taking. Price moves down. At this point, it's easy to feel frustrated. Price clearly put in a bearish divergence, and you may be thinking to yourself, you missed the trade, as we even put in a good bit of positive delta. But the sweep being that shallow just didn't sit right with me, as it was the foundation of the trade. A word to new traders out there: if you skip a trade because it doesn't meet your criteria and feel this way as it starts to play out, just be kind to yourself and understand that the decision you made deserves a pat on the back, as you acted in a way that was mature, responsible, and disciplined. You had a set of criteria you needed to enter the trade and you didn't get it. This is good trading practice, and you should never abandon it, regardless of how frustrated you might feel. Remember, a trader is nothing without discipline. Price then comes down and ranges for another 4 days before popping back up and again starting to diverge. This divergence plays out yet again, and at this point we have to practice patience with the market as it's teasing and testing us. But as I said, discipline is key and we must wait. Price ranges yet again before popping back up, and boom, we finally take out the level. Not only that, but we have another divergence, and this time one we can finally action as the level's now been taken out. Not only was it taken out, but as it did so, we produced a great bit of positive delta, particularly significant as it's the largest in this area, and even larger than the delta candle that previously marked the high. Our patience has paid off. We haven't mucked around with any subpar setups. We've been waiting for the stars to align, and they have. So we decide to start building a position. You may ask why we build a position as opposed to simply entering. Well, it's a good question, and the answer is that sometimes when you have the right signals, as we do here, but don't quite have the best feel for an exact entry, it's best to slowly scale into a position. In this case, I'm treating this as the divergence confirmation candle, as it's the first red candle we've had in the divergence that's particularly significant, but it's not exactly a striking candle that screams that this is topping. So we can take, say, 30% of the position here with a bit of room on the stop loss, understanding the price is very likely to top out, but exactly where, we don't know. A few hours later and price closes firmly underneath the level we've been monitoring, a much clearer sign that the move is underway. So we take our remaining 70% here, giving us an average of around here. We are now in position, and target-wise, we're going to keep things fluid and see where we go, waiting for the market to give us clear signs of when to exit the position. Price starts to break down a bit, and at this point we're in good stead, so we can tighten up our stop and let the trade play out. Price does indeed play in our direction and starts aggressively downtrending. We also take out this low. This may feel like a good time to close the position, as we have a very sharp move and a potential sweep and reversal on our hands. Remember earlier when we said we either want to see a divergence or fast speed when taking out a level? Well, we have that here, which is a clear warning shot to exit the position, and one we shouldn't take lightly. So we take a look at our delta page and see if we're given the red light, so to speak, that tells us to jump ship and secure profits. But we don't really have anything significant at all on the delta here, just another very average couple of bars of negative delta. So we stay in, trusting this data and seeing if we can squeeze some more juice out of the position. A day later and we're rewarded for our choice as we go for another significant leg down. At this point, we have a flat-bottomed hourly AO divergence as price makes a lower low, but the oscillator stays flat. A 2-hour bullish divergence on the RSI. And finally, a nice bit of delta and liquidations, giving us ample signals to close the trade. We close the position at a final risk to reward ratio of 10. Meaning that with the adjusted stop in consideration, if we had $1,000 risk on the line, we would have made $10,000. Here's what the trade looked like in motion.